Hello friends, welcome to the Blockthrasher Daily Morning Update, where we are shattering the complexities of crypto with news, analysis, commentary, and just the best information you can find regarding cryptocurrencies. Every morning we are going to cover the market. We're going to look at what's happening with prices and also talk about the most important news of the day. Today is Wednesday, February 3rd, and it is a it is a phenomenal time. That's a coin. An amazing time to be in cryptocurrency. Really great things are happening. The market is hot. It is on fire. So let's jump right to it and take a look at what's going on with some of the prices. Looking at coin market cap, today we can see that Bitcoin is at $36,681. That's up 20% for the week and up 5.52% in the last 24 hours. Ethereum has been killing it, coming in at $1,553. That's a 25% increase. And there's good news with Ethereum that we're going to look at later concerning Grayscale and their fund putting more into Ethereum. Polkadot is doing phenomenally as well at 26% increase in the last 7 days. It sits at $19.43. That's up 16.27 in the last 24 hours. Polkadot's just taken off today. XRP is down a little bit for the last 24 hours at 37 cents, but that's still a 49.7% increase on the week. And there's some really good news actually about XRP today, which, as you may know if you've been following me for very long, I've always had apprehensions about, and I still do, for a number of reasons, such as the fact that we saw just yesterday $130 million US worth of XRP was sent to the co-founder Jed McCaleb. Things like that don't look so good, but there is some good news, and we're going to get to that in just a little bit. For XRP, Cardano has been killing it this week, up 35% in the last 7 days. However, it's sort of stabilized, actually coming down a little bit in the last 24 hours, negative 4.47%, but it is right at 42 cents, which is really great. And I'm hoping we see 50 cents very soon. Chainlink sitting at $25. It is up 21% on the week as well, 7.94% in the last 24 hours, looking really good. The last thing I'm going to look at here in terms of coin market cap and prices is what is happening with Dogecoin. Dogecoin has been all over the news, of course, and just a few days back, I had 4 or 5 people texting me, calling me, "What is this Dogecoin? Is it good? Should I get into it?" etc. And my response was, you might be able to make a quick trade on a pump and dump and earn some quick profits, but you also might get burned really badly because there's nothing fundamental driving that price. There is some network effect happening, some adoption happening, potentially, although I would argue that most of the people coming in know that there's going to be a pump and are just looking to get in at the low, sell at the high, get out. There's no superior technology, there's no use case, other than maybe being used for payments or transactions when you're transferring coins from exchange to exchange. Sometimes people have used it in the past for that reason. Of course, if you're trying to avoid really high Ethereum fees, that could be a reason. Bitcoin fees are, not that bad currently, so that would be less of it. And there's other options that you can use other than Dogecoin. So there's nothing really unique or special about Dogecoin. It's been around a long time as well, but it's seen over its history these pumps and dumps, and I would be very cautious concerning Dogecoin for sure. It was up 318% in the last 7 days, but it is now down 2.13% in the last 24 hours, coming in at just a little over 3 cents. We'll keep watching that and see what happens. Now on to the news. As I mentioned earlier, there's a whole bunch of news that is really positive in terms of adoption, mass adoption, doors being opened up to create easier access for people to get into cryptocurrency and for greater adoption to expand, for the network effect of Bitcoin and of all the cryptocurrencies to expand. And this story that we're going to look at right now illustrates that very well. Visa is becoming friendly and opening up some opportunities for the purchasing of cryptocurrency. Let's take a look. So Visa aims to launch a suite of software APIs this year that gives banks access to buy, sell, and store crypto assets for customers. Now this sounds great. And It is. I mean, a lot of people are going to come in that way and they're going to feel safer. One of the concerns that many people have often voiced to me is, I just don't think I can back up my crypto properly and I'm afraid that I'm going to lose it. And well, here's a solution for you if that's the case. Visa is going to allow your bank to, through Visa, buy, sell, and store your crypto assets. They will be the custodian for their customers. Anchorage will be the digital custodian of Bitcoin and cryptocurrencies purchased at Visa's partnering banks. The above service eliminates a big hurdle for banks in offering crypto-related services due to lack of expertise and security concerns. So I can see that. I mean, a bank wouldn't want to have to store people's cryptocurrency and deal with different wallets and keys and just keeping track of it. They'd have to build out. Well, an API has been created by Visa partnering with Anchorage that's going to take care of all of that for them and take on those risks and that oversight and how to store it and that sort of thing. So good. Obviously, banks are going to probably jump on the opportunity because they want to make some money. You can bet there's going to be fees associated with all of that as well. Now, First Boulevard in Kansas, an American digital bank that promotes the economic status of people of color in the U.S., will be the first bank to integrate the APIs. Currently, Visa is only looking to tap the investment potential of digital assets compared to their payment capabilities. Now, this is where it gets really interesting. Repeat that again. Visa is looking to tap the investment potential but not provide payment capabilities. So Visa is not going to be making it possible for you to use your cryptocurrency to buy things. They're not going to set it up, at least for now, in such a way that you could say, hey, I want you to, I have a basket of cryptocurrencies that I'm holding with you in this particular bank, and when I buy things, I want you to sell off some of that and convert it automatically to dollars for the merchant. That would actually be pretty slick. And maybe we'll see that happen eventually. I don't know. But currently, and this is the part that gets a little bit concerning to me, Visa looks only to tap the investment potential. So what that means is that you're going to be able to purchase cryptocurrency as an investment asset, sort of like a stock, through the bank, but you will not be able to withdraw it to your own private wallet. You won't be able to. So this is concerning because, again, it opens up an opportunity for some potentially bad things like manipulation to occur. Banks operate on a system called fractional reserve banking. So even when you deposit your dollars, that bank doesn't have to hold onto those dollars. They can reallocate it in investments and they can rehypothecate it. And so for every amount of say there's $1 million in a bank, they can, I don't know the exact number off the top of my head, but 7 times, 10 times, whatever it is, maybe 20 times, they can use that amount of capital to lend out loans and do a bunch of other things, 10x, 7x, whatever it is, times the amount that's actually in there, that $1 million. So for every $1 million, they can loan out X amount. So the reality is that because of the fractional reserve banking system, your money's not actually in the bank. Like you can't go, if everybody were to go to the bank on the same day and try to withdraw what they have in deposit, the bank wouldn't have that money. And that's why there's FDIC insurance, and that's why banks can, a run on the bank can occur and things like that. So they could potentially do the same thing with crypto, in theory. So there's 21 million Bitcoin, but if people are just buying Bitcoin, the asset at the bank doesn't actually have to prove in any way, because there's no regulation regarding that, at least now, that they actually have the underlying asset, that they actually have that Bitcoin. So they could sell, hundreds of millions of Bitcoins, in theory, at whatever the spot price is supposed to be, and it's sort of just more of like a derivative, that what you hold is a paper Bitcoin, a paper crypto, and the price is tied to that. And then when you cash out, all they're really doing is dealing with dollars. And so something to be wary of. I mean, that could be something that Robinhood was doing as well, and I talked about that before. So PayPal is similar in this, as is noted in this article. PayPal expressed similar intentions when they enabled Bitcoin and crypto as an investment vehicle last year, disabling deposit and withdrawal of crypto. The launch of crypto on PayPal in the latter half of last year was a major contributor to bullish sentiment in the crypto market. So overall, I think this launch that Visa is providing, this API that they're providing to banks, and this opportunity will probably be good for mass adoption overall. But when I see this sort of thing, it does sort of concern me a little bit, because we could also potentially head in a direction where, if that becomes a really big thing, PayPal, banks, Visa, Robinhoods, all of these allowing you to purchase crypto as an asset but not transfer it to your own wallet, then we could see them actually passing regulation to say that you can't hold it yourself, right? You can't self-custody. You can only hold your crypto within one of those institutions. Well, that kind of defeats the whole purpose of cryptocurrency in the first place, because one of the benefits of cryptocurrency was that it couldn't be confiscated, that it was borderless, that it provided privacy, so your transactions weren't being tracked or traced. Well, obviously, some of those things might be things that governments might not care for. However, the interesting thing about Bitcoin and cryptocurrency is that it's global. And so there'd have to be a worldwide effort. And there's actually one story that actually we'll just jump to right now that's very interesting that has to do with this entire concept. And it is, let me just go back and finish that thought. Because cryptocurrency is global, and because you can have a private wallet and you can send it between people across borders to other countries, etc., that while regulation in one country might say, look, you know, it's illegal to own Bitcoin in your own private wallet, you have to own it on one of the approved banks, which then opens you up to fees and all kinds of other things as well, right? I mean, there's going to be places in the world where that's not going to be the case, and to what extent? And then, of course, people are going to try to circumvent that using VPNs and other types of things around the globe. And, you know, it's interesting because normally in third world countries in which they have serious problems with their central banks and their currencies start to be devalued, lose value, inflation hits, hyperinflation, we've always looked to it as a good thing that some of the people in those countries could then go into Bitcoin, or Dash has been a popular one in Venezuela, for instance. Obviously, any of the cryptocurrencies would work in that regard, and so then those people could be isolated from the problems within their own country. And we've always seen that sort of as a good thing because these countries are so mismanaged, right? And you know, these authoritative, and some of them are even considered enemies of the United States, and like in the case of Venezuela and whatnot. So, you know, it's very fascinating, this whole entire conversation. But Binance is playing in, is doing something that could have an impact on all of this. And it says that Binance wants to get more people using crypto with its new payment service. So this is very, very, very interesting and fascinating. Cryptocurrency exchange Binance has launched a new payment system called Binance Pay, in what its CEO says is a move aimed to get people using crypto rather than merely holding it. So, like, on the exact opposite of what Visa's intentions are, and PayPal and Robinhood, etc., Binance says, look, we're going to create a system where we're going to create a wallet that's going to be tied to a card, a debit card, where you can have a basket of cryptocurrencies in there. There's like 5. We'll maybe get into that as I read the rest of this here. But you can then go to a merchant who will use the Binance wallet as well. You can swipe to pay, make your payment, or use your phone, make your payment, and you can allocate that I want to have that payment drawn from these currencies which are in your wallet, and then the merchant can be paid, and it can automatically be transferred to a stable coin, so the merchant then captures the value of that will be stable to whatever the price they want for the item that they're selling. This is great. This is exactly what we have been looking for. This is brilliant. It's beautiful. So according to the exchange's page about the new product, Binance Pay, currently in beta, allows users to make contactless, borderless, and secure cryptocurrency payments around the world. Binance Pay is a basket product which we do plan to spend a lot of effort on this year. We think that payments is one of the most obvious use cases for crypto, said Changpeng CZ Xiao, founder and CEO of Binance, announcing the news at the virtual Binance Blockchain Week event today. A little bit more details here. The Pay platform allows users to pay and be paid in 5 cryptocurrencies: Bitcoin, Ethereum, Swipe, BNB, BUSD, and 1 fiat currency so far, the euro. When CoinDesk asked Binance if it intends to add more payment options, a representative said more information on functionalities and plans will be released soon. So this is how it works. Users will need to top up their Binance Pay wallet, shared with a Binance card wallet, in order to make payments. QR codes are generated when a payment is made that can be scanned by the recipient in order to receive the funds. So I actually covered all of that already. But this is, like I said, this is really, really great. Binance gives merchants the opportunity to accept fiat-backed stablecoins for payment and not be affected by the price volatility of the cryptocurrency. And it allows users to use their cryptocurrency that they hold in their wallet to make payments. Love it. Love it, love it, love it. Other good news, Grayscale adds 38 million worth of Ethereum to its Ethereum trust. Some people are speculating that this might have also helped with the price and upsurge that we see happening with Ethereum. and Grayscale is going to continue to do those type of things. As we saw yesterday, they have filed to open up 5 or 6 new funds as well for some other cryptos. So we'll see what happens with that. Getting to XRP, this is the XRP news that I was talking about. That's actually very positive for XRP. Obviously, the biggest concern with XRP has been what is going to happen with the SEC's charge that they were possibly an unregistered security or offering an unregistered security. There are things that have happened with XRP even of late in the last couple of days that are concerning, such as, I think I mentioned earlier, maybe I didn't in this episode, but the $130 million plus transfer of XRP to the co-founder Jed McCaleb, who's actually no longer with the project, but these types of things just don't look well or bode well for the coin. However, in this story, the former SEC executive explains why the lawsuit against Ripple over XRP is a mistake. Recently, Joseph A. Hall, a former executive at the U.S. Securities and Exchange Commission, SEC, explained why his former employer's lawsuit against Ripple is considerably less a slam dunk than its previous crypto enforcement actions. Hall has been partner in U.S. law firm Davis Polk since September 2005. Before that, between October 2003 and June 2005, he was working at the SEC, where he ultimately served as managing executive for policy under Chairman William H. Donaldson. I'm going to skip through some of these things and get to the meat of this. Here, Hall predicts that Gary Gensler, President Joe Biden's pick for U.S. Treasury Secretary, who was the former head of the U.S. Commodity Futures Trading Commission, the CFTC, during the Obama administration, will chart a different course from recently departed SEC Chairman Jay Clayton. Very, very interesting. And if you don't know about Gary Gensler, he also taught a course on Bitcoin and blockchain at MIT, said to be crypto-friendly. The fact that he's the new SEC Chairman might just change things a bit. And this is the hypothesis of Joseph A. Hall. Plus he says, as we just read, this is misguided anyway. So he says, Joseph, with luck, the agency's heretofore skeptical approach to the regulation of digital assets or cryptocurrencies will be one of them, particularly with the SEC's decision a day before Clayton's late December departure to file a suit against Ripple Labs Inc. over its cryptocurrency XRP. Hall is explaining how inadequate the SEC's Howey test is for deciding whether a particular crypto asset is a security. This is good stuff. Getting into the meat of Joseph Hall's argument. He says, imagine trying to explain what an iPhone is in language your great-grandfather would have understood. Just after World War II, that's how easy it is to predict with digital assets what are securities under the post-war Howey test. He then argues that this lack of regulatory clarity significantly hurts the development of blockchain technology in the United States. Fascinating and good news for XRP. And of course, we'll be watching and to see what is going to happen here. You know, when we looked at the cryptocurrency, the market, XRP has done surprisingly well in terms of its recovery post announcement of the SEC filing. And today, it's back up at 37 cents, up nearly 50% on the week. So we'll see how that goes. Robinhood is in the news again, and yes, as we speculated earlier, there has been a class action, see if I can get that out, class action lawsuit filed against Robinhood. Robinhood, the stock trading app formerly popular with millennials, is facing another class action suit following its recent temporary suspension of purchases of GameStop and other meme stocks through its platform. The lawsuit, filed January 29th in Houston, Texas, alleges that Robinhood, along with other named defendants, including TD Ameritrade and Webull, arrived at a common understanding of what must be done, which they carried out with conscious parallelism. Keyword, conscious parallelism. Conscious parallelism in competition law refers to behavior in which competitors in an oligopoly set prices or terms without a formal agreement. One entity will take the initiative in setting a price, while the others follow suit, as a departure from that behavior could threaten market share and lower profits. In short, the situation that was unfolding was a threat to traditional players in the finance industry, We're talking about Citadel Capital, Melvin, or Citadel Investment, Melvin Capital, many of whom were defendants, largest customers, and it could not be allowed to continue. Yeah, Robinhood's in trouble. I mean, if you've been following what's happening on the social media, it was funny. I was on Facebook and I saw an ad for Robinhood, and they were saying, we want you to know, I'm paraphrasing, but something like, we want you to know that we've always had our customers' concerns as our concerns, and blah, 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 you know, and they had a link to follow to go read their PR statement about what they're doing. And in the comments, it was just like, I'm done. I'm out of Robinhood. I've made a deposit. It's been in there for 2 weeks or 7 days. The funds still haven't cleared. I can't buy anything. I didn't intend to give Robinhood a loan, but I'm giving them a loan. I'm gone. I'm out. I'm opening up with a new brokerage. You know, some people were like, I had automatic deposits going in on a regular basis, and I'm ending that. I mean, it just doesn't look good. Doesn't bode well. Yeah, Robinhood's probably in trouble. So, moving on. One other interesting story that has to do with mass adoption is the fact that Binance and Coinbase are now within the top 1,000 most visited websites on the internet. Of course, Uniswap coming in close behind with those as well, as it has been actually getting more use than Coinbase.com. So everywhere we look, there's good news on the horizon. Now, before I go, please be sure to subscribe to the YouTube channel. Subscribe if you're on another platform watching the video as well. Look for the podcast, which is on anchor.fm. Links will be in the description below. You can find those on the website, blockthrasher.com. Love to have you there as a member, even if you just grab a free membership for now. As we release more and more useful information, I think you're going to want to join up for a paid membership. It's not very much, and there's going to be a ton of fundamental analysis. Right now, I'm working on wrapping up a deep dive on Polkadot, and it's going to cover everything and anything we'd ever want to know about Polkadot, as well as talk about where it sits in terms of its competitors within the market. Looking forward to that. Look for that. Join the Facebook group. It's facebook.com/group/blockthrasher. Again, I'll put the link in the description. Love to see you on Twitter. Just get involved with the Blockthrasher community and look for more content coming to you every single day. Love you all. Have a great day. It's a great day to earn more crypto. Talk to you soon.